Okay guys, for the last section of this video we want to take a quick peek in this educational material that I have, and I want to show you a couple of slides that are focusing on drawdowns and controlled losses versus uncontrolled losses. This is a very important topic that every trader needs to have in their mind and also should make notes about and just post them next to the computer. Like I said guys, this is only a sneak peek, but I still think it's going to help you. So first of all, we talked about if we are traders, we are basically building an equity curve, an EQ curve, right? This is our end product. You can see an equity curve I have built here in this mock-up, and this is basically our product. And we have this kind of production line where little parts are coming out every day, and the parts need to be standardized so they can fit with each other, and then finally build this equity curve, out of all of those parts. And those parts need to be standardized, and I mean with that the same kind of win trades, the same kind of break-even trades, and the same losses when the losses happen, right? Okay, now let's take a look at what I wrote down here. So every EQ curve will have drawdowns. It cannot be a process that goes only up in linear fashion. As much as we would love to have a linear fashion, it's not possible. There will be drawdowns, and you can see it here in this example. There was a nice linear fashion. Each dot is 1 day, and then there was like 5 days or something just a sideways in the equity curve, and this is the kind of area where you should not freak out. It's just normal. Don't do things like, oh, I'm second guessing like my system now, oh, the world hates me, of course I need to lose, blah blah blah. Just continue with the process, and then you can see what happens after this. There was one big trade which worked out well, and then I just continued building the EQ curve. Okay, then let's continue. It is in the drawdown phases when the good traders are made, right? This is also very crucial. The reason why many of you are not in the top 5% of consistent traders is because you freak out in the drawdown phases. You cannot deal with them. Your psychology is not strong enough to go through them, right? You second guess all of it. You think the world is against you, stuff like that, right? And in this kind of drawdown phase, you need to stay calm. You have different options. First, you just, on the production line, just continue like normal, like everything is normal, because this is a normal process. Just continue like nothing happened. And if you see the drawdown becomes worse, and it is not only 1 day, it is 2 days, 3 days consistently just drawdown in a row, that is of course a very unpleasant scenario. But also in that scenario, you can do things, you can take actions. For example, you can decrease the lot size. That is the first advice I would have for you. Decrease the lot size. If you still keep on losing, decrease your take profit, because if you decrease the take profit, your win rate will automatically be higher. And if you do these two things, you basically have no choice but to stabilize the account, right? There is no other scenario, because your win rate will be very high and your lot size is very low. So it will be a very calm process and easy for the mind. Okay. But these are measures you only need to take if the drawdown is worsening, right? If you just have an up and down like I have here, nothing to freak out about, just continue with the process normally. All right, then to survive the drawdown phases, we need to see it as a natural occurrence. This is very important. And we need to break emotional cycles that will happen in those drawdown periods. Yeah, and we should never engage in uncontrolled losing when we are in the drawdown phase. Right? Because what normally happens is, first of all, is a lot of traders, they don't want to accept the drawdown, and we need to accept it as a natural occurrence that just happens over and over again. Sometimes we need to give back, right? I see it like that. For example, if you're trading with your friends, and this is not electronically, let's say you're in the schoolyard and you're trading the Pokemon cards with your friends, and you always get the best stuff every single time. What will happen? All of your friends will not trade with you anymore. They will be like, this guy scams us every time, right? And so what will happen? They will all quit trading with you. And this is exactly why you need to lose. You need to lose sometimes so everybody sees, this guy can lose, so we will keep playing with him. Okay? Then you need to break emotional cycles, because of course, human nature, in those drawdown areas, these emotional cycles just will come. There's nothing you can do about it. They will come. But there are ways to break them. Sleeping is one of those ways. Then shutting down the computer after certain targets have been hit is the other way. Detaching, find other hobbies. All of that stuff is part of trading, and this is what you don't realize. All of that stuff, even sleeping, is part of trading. Then we need to break the emotional cycles, because if we cannot do that, we will engage in uncontrolled losing, and this is very bad behavior. You should never engage in uncontrolled losing. This is what unprofessional traders do. They just say, I'm in drawdown, so I should maybe increase my lot size, or I will increase the stop or whatever, and then I don't have any control anymore really about my losing, because if I give in one time, it will happen again, right? If I'm in loss, I would just, increase the SL size again or increase the lot size again. If you give in one time, it will be definitely uncontrolled losing. You will not get out of this well, and the market will eat you. The market just waits for this behavior of you and then will eat you alive. That's just how it is. So we can never engage in uncontrolled losing if we're in a drawdown phase. The losing always needs to be planned. Always we need to know, okay, this is how much I lose, and I just continue normally. If the drawdown becomes worse, okay, I decrease the lot size and now I just lose half of the normal size. All right, guys, then if we follow our rules, then each day is just a binary outcome, right? It's either going to be a win, always the same win trade in the production line, or it's going to be always the same loss, or maybe the same break even. And if a worst case day happened where you took, I don't know, 3 trades, all of them were just losers in a row, I don't know why that should happen, but if that happens, then it's just going to be maximum 2% minus. In the binary outcome, a losing day, worst case, can only be minus 2%. So if we do all of this, then important, and this you need to know, we can survive any drawdown. Any drawdown, we can survive it if we just behave ourselves. Trading is basically just a behavioral thing, right? It's just adequate, right? I mean, if you eat in a 5-star restaurant, you're also going to behave yourself. It's the same in trading. If you can behave yourself, you will have a success. That's all it is. All right, then let's look here in the next chart, controlled versus uncontrolled loss. This is important. So first we look what is a controlled loss, and this is for my system actually, but it can be rewritten for any system. So we need to close the trade on a 1-hour counter signal. I'm mainly active in the 1-hour time frame. If I have a clear counter signal, I go out. For you, this can be anything else in your system. You just need to have a clear exit rule, and if the exit rule is the SL, that's also okay. Okay, trade closes automatically at maximum 30 pips, 3 times ATR. This is also my rule. Okay, we lose 1% on the account and position is finished. So if a loss happens, it's just gonna be minus 1% on the account, because we need to have the risk very controlled. It cannot be too big, otherwise we will not be stable enough in the mind. All right, guys, so now let's compare this with uncontrolled losing. We stay in trade despite realized 1-hour counter signals. So I don't know about your strategy, but any strategy basically has a point where you know, okay, the signal is bad now, right? If it's support and resistance, whatever it is, there is a point where you know the signal is bad now. And in case you are not stopped out at that point, because you still have room to the SL, you might as well close the trade there and save yourself some losing pips, right? So for me, it's a counter signal in price action, because I do price action. If I see a counter signal and that is realized, I go out. Yeah, if you stay in the trade despite a realized counter signal, then you are already in uncontrolled losing probably, or you're close to that, right? So this you should also never do. This is part of uncontrolled losing. We open another position to counter current loss. This is terrible. Never do it. Never, ever, ever do it. There's only 2 ways how you will lose money as a trader. One thing is over leveraging, and the other thing is over trading. This is why I never open another position when I'm in loss. And this is why I don't trade more than 2 or 3 trades per day. Because these 2 things, like I said, over leveraging and over trading, are always the 2 things why we go in drawdown and then uncontrolled losing happens and then the account is toast. So this, you can never do it. If you catch yourself opening a position in a losing trade, then you're basically done for. There's only one exception to this rule. If already before you open the trade, you say, okay, I'm not so sure about this price, maybe it can also be a little bit cheaper, So I split my position in two halves, right? But they are each 0.5%. You already know it's half size of what you normally do. Then you are allowed to open another position when the first position is in minus. This is the only exception. But you can never do things like, okay, I do my normal lot size. Oh, look, it's a minus. I need to counter this minus, and I put in another size. Right? Exactly the same size or maybe even higher. If you do this, you're done for. We move the 30 pip SL and let account go over minus 1%. This we of course can never do. It's uncontrolled losing. So for me, most of the times I have a 30 pips SL. It can be anything else in your strategy, but your SL that you normally have, you can never, ever move it, right? And you can never then, allocate more than 1% risk in a single trade. Because if you move your SL, you allocate more than 1% minus in that trade and you're gonna be eaten alive. I promise you that. Now we talk about the psychological cycle. This is the final slide here, and it's very important what happens in our brain, because like I said, drawdowns affect us, of course, in our psychology, but also winning trades also are poison to us. They also are bad. Okay, we will see this in this cycle. All right, let's take a look here. So we're starting off serious normally. This is where we always start, and we are focused and serious, and we know the market is a dangerous place, right? Okay, so let's go through this quickly. So we understand that the market is a dangerous place. This is why we behave accordingly, and this is why we are serious about it. We don't take anything for granted. We are very disciplined in this part of the cycle. This time, we will behave ourselves and work with strict discipline. Normally, I wrote this time because normally after we have experienced some losses that we needed to realize and we are depressed, then normally we recover ourselves and we start off serious again, and then we say this time we will behave. And in the beginning we do that actually. And this is also the part where our A game is here and where the best trades are done, right? And this is the part where the equity curve goes up. Okay, we have low expectations from the market and we are very picky with our signals normally here. Okay, so what happens after this? There are two scenarios. We go either in a drawdown and then we are right here actually already at loss and losing control, or normally we have a step in between because we are very serious here, so we get into winning and then hype and overconfidence is coming. All right, so everything is going well. We feel like market experts. This is terrible, man. We feel like market experts. We consume the news. We consume all that crap. We talk to our friends about our good trading, and this is the beginning of the end. So we think it will always be like this. It will just magically continue like this, and we become more careless because we are market experts now. We become lazy. We don't become picky with the signals, and sometimes even we see a nice winning series. So it can be that we become overconfident, or we can think, I need to keep up the winning series and pressure ourselves with the nice series and say, I need to do a good trade today and force a trade. This can also happen. These are two things. Either we become careless or we force trades. Both are poison, and we're gonna be very bad off after this, right? So let's see what happens after this. Now we go transition into the losing period. So suddenly an unexpected loss happens and we feel terrible because we built all of this nice equity curve and we don't want to give in now, right? And we were thinking everything would be nice. We are in this fairy tale land, and why is there a loss all of a sudden? We cannot accept it, and because our strategy was so bulletproof, how is it possible? So then, of course, we don't want to book this loss because it is going against everything that we just, build up in our mind. So, all right, and then this is the worst part. After this, we don't want to take the loss, and then we start to manipulate ourselves in all kinds of ways, right? This can be over leveraging, this can be SL moving, this can be go into other pairs that are actually correlated. It can be anything, okay? And because of this, we don't want to accept the loss, right? We don't want to accept the loss. We start manipulating, and let's see what happens. Then the loss is normally getting bigger and bigger, and the uncontrolled loss is happening now because we gave up control. Normally, exactly when we manipulate, we gave up the control because there's too much size, and we go into hoping. There is only hope now that this trade will turn around. And when you hope, it's done. 90% of times it's just done. Don't even bother with it. You're not gonna get out magically. You're done. The market has just waited for you to do this, and you're gonna be eaten. Okay? So, and then when the loss is big enough, our dreams about trading become shattered and we're done for, right? So that is what happens. And then at some point we need to take the loss. Either it's gonna be margin call, or it's gonna be too big of a stress, or we're gonna be stopped out finally, and we will be done for. And finally, when this uncontrolled loss is finished, that has taken over our life, our psychology, our mind, everything, then, only then, when it's finally finished and we were forced out, then we can go to the next part, which is giving up. We gave up. We see this is not working. Trading is not working. It's bullshit. We knew it before already. It's bullshit, but now we definitely know it. And now what happens is we go into emotional detachment automatically, right? Because we see we can move on with our lives. You know, we didn't lose an arm. We didn't lose a leg. We're still alive. And so we can move on with our life. And then automatically we will detach, right? So in that case, we have taken the loss and we give up and accept that all of this happened. And I was in this area on Thursday, right? But because I'm professional, I tend to go to this area very quickly, right? I try to go from here to here because this is the hack, but you will see in the next slide. I try not to stay in this area for too long because this area is going to destroy your life. So let's take a look here. We don't believe in trading anymore and give up. And because we give up and don't believe in it anymore and see that it's crap, we can finally break the emotional bond. And with that, we can become reasonable again. And with that, we can make sound decisions again, right? And normally after that, it takes some time. We look at our balance, look at the damage, we recover, we do all of this stuff, which we don't realize is part of trading. But exactly this is part of trading. It's not the charts. This right here is the biggest part of trading. We do other things. We see our friends again, we go to the gym, whatever it is, and we can't forget about what happened. And this is actually the biggest part of trading here, right? When all of this is done, we normally go back in this starting of series because we want to trade again at some point in the future. We're not giving up completely, but we are leveled on the mind again. And then what happens? We are serious, we take it serious, we don't do any bullshitting, right? And with that, we can have good trades again. We do our best signals. We are picky. We know the market is dangerous. We don't expect much from the market because we know it's dangerous. And suddenly our A game trades come again, and suddenly the equity curve goes up again. This is the reason why the equity curve actually goes up and down. It has nothing to do with your trading. It has nothing to do with your system. It has all to do with this cycle here, right? Now let's look quickly in the last slide so we can wrap it up here. So now we look at the hack, but I already told you about this. The hack is we don't want to be in the cycle. We want to be in the triangle. So we start off serious, and then we don't give a crap about hype and overconfidence because we know trading is very unstable and we never can have any certain future with it. So we can cross this out. This is important. Just cross it out because this is an unnecessary step, and we don't need the emotional high because we know the emotional high is the beginning of the end. All right. Then, of course, we will get into some losing. It's part of this journey, but we see that it's controlled losing, right? We're going to do controlled losing, or maybe if we win, it's going to be a controlled win. But either way, we're not going to be happy about it and we're not going to be sad about it. It's all just controlled stuff that the machine spits out, that comes out of the production line. It's a controlled loss, a controlled win. Every day is the same. We don't care. And we look for other hobbies and stuff like this, right? So because we could do all of this controlled and we don't really care what the market randomly gives us, we can detach emotionally much faster, right? We can go from this controlled environment where nothing is crazy. We can go directly to emotional detachment, and this will be easy in that case because we are not invested emotionally so deep, so we can detach much easier. And detaching is the most important part of trading. It's like in the gym when you eat some proteins later. This is the most important thing so you can grow. So emotional detachment, we need to be masters of that. And the less emotionally we are invested, because everything before was controlled and we didn't go in hype and overconfidence. And then, of course, this area here can be done very easily. All right, guys. And then last point, we understand the psychological cycle and we know it's always occurring. We know it's a human nature and always present. We control losing, and this keeps us in the game. and we do control losses, yeah, and we master the art of detachment, this right here, okay? And this is the hack of the psychological cycle. And with this being said, we're gonna wrap up. I wish you a wonderful week and a lot of success in your trading, and I'll talk to you in the next video. Take care. Bye bye.